welcome to the midweek trading day right here. All eyes on central bankers, from hikes to holds to cuts. Investors are watching and following the rhythm of the market right now. But let's get a check on how your money performed yesterday right here on the local bourse. Now, we see the bears return to the Nigerian exchange. That was on Tuesday, wiping about 71 billion naira off investors' wealth as bellwether stocks. They dragged the market lower. We see the all-share index there, just about 8 basis points. So I won't call it a big drop, at this time, but could that signal a pause and momentum? We'll definitely find out. So 141,000, that is still holding at this point. Capitalization there, that fell to about 89.55 trillion. You see sell-offs in names like Austin Lars, Deep Capital, FTN Cocoa, Regency Alliance, and Champion Breweries that fueled the downturn, with trading activity also, cooling, sharply compared to the previous trade. Volumes, value, and deals all posting about double-digit declines there. We see the top gainers there. Custodian, 9.94% up. Multiverse, that was up 9.68%. We see eTransact, that's been on a monster run from a 45% rise for the whole week last week, and still rising, this week. So that's how your money performed yesterday. We'll definitely keep an eye. The trade is open right now on the exchange. All right, so Nigeria is pushing to cement its energy leadership in Africa, with the Minister of State for Petroleum Resources, Oil, Senator Heineken Lokobiri, unveiling plans for a West African reference market, WARM. Speaking at the Africa Oil Week 2025 in Accra, Ghana, Lokobiri said the initiative will leverage Nigeria's expanding refining capacity to supply petroleum products across West Africa and beyond. He noted that the continent spends over $120 billion annually on hydrocarbon imports. Money, he insists, should be retained to drive Africa's own development priorities. And let's get a check on the oil market now. One of our biggest forex earners there. We're seeing oil prices there taking a breather again, even though they're still quite high, at this point compared to how the week started. For $68.25. Looks like Brent is trying to make a run for $70 per barrel, 0.32% down though. WTI, that's the US grade, $64.33 a barrel, 0.29% down. And investors watching geopolitics at this point, what's playing out in Russia, and all eyes on the US Fed today. What the US Fed decides for interest rates definitely is going to impact the oil market. So we're seeing investors there taking a breather. I'm talking about impact. You're seeing the Center for the Promotion of Private Enterprise. They've welcomed the new inflation figures from the National Bureau of Statistics, showing a fifth straight decline to 20.12% in the month of August. The economic think tank says the slowdown reflects a more stable exchange rate, a stronger food supply, and base effects from last year's high prices. However, the CPPE says consumer confidence in the country's economy remains weak due to persistent high food prices and weak household purchasing power. The Bank of Agriculture signed a $1 billion financing agreement with the African Export-Import Bank, Revving Bank, to support smallholder farmers in Nigeria. The landmark deal, which was finalized at the just concluded and highly successful Intra-Africa Trade Fair 2025 in Algiers, Algeria, follows the approval granted by President Bola Tinubu for the establishment of a National Food Security Fund, which will be a revolving matching fund in partnership with state governments. Meanwhile, Revving Bank and the Midstream and Downstream Gas Infrastructure Fund have also entered into a strategic partnership to raise $500 million for the development of gas infrastructure in Nigeria. The move is expected to accelerate midstream and downstream projects, expand gas utilization, reduce flaring, and drive industrialization in the country. And Lagos, Nigeria's commercial capital, has been playing host to the glitz and glamour of the Africa Luxury Expo 2025, a gathering that brings together some of the world's finest brands alongside African designers and entrepreneurs. From fashion to fine art, the two-day event put the spotlight on Africa's growing role in a world of high-end living. Our correspondent Willie Bong reports.
Nigeria is fast becoming a magnet for luxury, and this week, Lagos set the stage for conversations that could redefine Africa's place in the global high-end market. Here in Lagos, the Lux Africa Expo brings under one roof global and local names. But beyond the sparkle and design, the real question is, can Africa define its own luxury future? From art and fine wine to jewelry and couture, the Africa Luxury Expo 2025 unfolded over 2 days. Exhibitors tell the story behind their craft.
Luxury Boutique is an international boutique that sells luxury goods across all 54 countries in Africa, and we deliver it to within 3 to 7 working days to anyone who purchases any brand from our website. Anybody that obviously want to buy them, they don't have to jump on a plane to go to Dubai or to Europe to buy them. They can easily go to our website, purchase them, and then we can deliver them directly to their home anywhere in Africa.
As you have been navigating this business,
Panels and workshops ask how the continent can move from consumer to creator. And some key issues could not be pushed aside.
In this last year alone, I'm hoping the people in this room can help me. I'm going to ask you a question, you tell me. How many times has the rate changed between the dollar and the naira?
We don't have any infrastructure where luxurious African retail can flourish.
But can Made in Africa really make the cut?
We're going to be handpicking local brands that we feel pass the luxury level. They have the quality, the authenticity, the product level, the creativity, and we'll be handpicking those brands, and we'll be working with them collaboratively to help promote them, not just here, but globally on a global platform.
I 100% believe that we can and we do have luxury in Africa. The problem is not the absence of it, the problem is our recognition of it. We don't recognize it.
In the next 5 to 10 years, I see us dominating. We're dominating the music scene. I think we'll get there with fashion, and we'll also get there with film in the near future.
7,000 gonna sell. So
the excitement peaked at the live Bonhams auction, where rare pieces were snapped up by collectors.
And it's all right. It's okay.
So what is clear here from this expo and the conversations we've had so far is that luxury is no longer just imported into Nigeria. It's being defined here, sold here, and increasingly invested in here. For many exhibitors here, this isn't the finish line. It's one more step in building a luxury brand rooted in Africa. Will Ibang, Channels Television News.
The Dangote Petroleum Refinery and Petrochemicals Company, they commenced the deployment of compressed natural gas trucks for the direct distribution of premium motor spirit, also known as petrol, throughout Nigeria. I was speaking at a press conference to mark the first anniversary of the petrol production from the $20 billion, 650 barrels per day refinery. The President and Chief Executive of Dangote Petroleum Refinery, Aliko Dangote, said the CNG trucks would create at least 24,000 jobs across the country. Take a listen.
Announcing the historic feat at the refinery complex in Lagos, President and Chief Executive of Dangote Petroleum Refinery, Aliko Dangote, who was flanked by the Vice President, Edwin Devakuma, and other top management staff of the company, kickstarts the interaction, which is described as a day of celebration.
Today is a day of celebration. We don't want to be distracted. When you are in Damaturu or in Maiduguri or you are in Yanagua, just pay. When you pay, we will deliver to you. You only pay what you receive. We are doing quite a lot of adjustment, changes, and code that I believe our capacity will go up. And based on what we have shown you before, we can produce even more.
The rollout of these trucks, according to the CEO of the refinery, will lead to the creation of at least 24,000 jobs with better conditions of service for the drivers, which underscores the company's commitment to pioneering innovative solutions by the world's largest single-train refinery.
You are saying that there will be lots of jobs. Are our own tankers going to be driven by robots? There are no robotic trucks now. There are trucks that, yes. And by the time you take a workshop manager, mechanical, electrical, okay, people who look after tires, people who look at logistics, movement of the trucks, dispatch, back office. Every truck is about 6 people. The best option that I believe, if people now really want this market to open, is to encourage, not only us, is to encourage everybody. We did not stop anybody. There are over 30 licenses that were issued. So those people who are making noise, they should also go and put up plants. By end of October, all the 4,000 tankers will be here. But by end of November, we'll have total on the road 10,000, I think 250.
You can see the loading on.
The company says this development will revitalize and modernize the logistics value chain in the downstream subsector of the petroleum industry in Nigeria. Alhaji Aliko Dangote, however, expresses appreciation to the federal government of Nigeria, industry stakeholders, workers, and the Independent Petroleum Marketers Association of Nigeria, IPMAN, which has been mobilizing members to register for the free distribution initiative using CNG trucks.
All right, now to our first conversation. Nigeria's auto industry has long struggled with heavy dependence on imports, from spare parts to finished vehicles. The Buy Nigeria policy is meant to encourage local production, create jobs, and strengthen industries like the automobile assembly for indigenous companies. The policy could be both a growth opportunity and a test of resilience, especially in a market dominated by imported used cars. Well, join us to unpack this. However, Mr. Oluwatobi Ajayi is the CEO of Nord Automobiles Limited. Join me right here in the studio. It's great to have you. It's been a while.
Same here. Yes.
Last time I had you was
about a year, maybe almost 2 years.
Almost 2 years.
Yes,
wow.
Yes, more than a year.
That's a long time.
Yeah. But I'm back here, and I want to. I think you'll see a lot of me more.
Right, and I'm trying to imagine what has changed, since then. And I did stumble on some data yesterday. From the Port Terminals Multi-Purpose Limited there, we have the H1 import data. That's for Nigeria. I see for H1 2025, over 34,000 units were imported into those terminals. That's used cars. Then for H1 2024, 18,000. So we're already about 90% up for the first half of 2025, with importation of used cars. For the 5-star logistics terminal, it was 32,000 H1 2024, then 37,000 in H1 2025. And I'm imagining, because the Naira is quite stable, and that's why they're all hitting the used car markets at this point. I guess one of the good thing there is the Naira has been stable.
Yes, which is good for business.
Which is good for your business.
Yes, very good.
Right, but seeing importation rising of used cars, that seems bad for business.
Yeah, so yes, but it's an issue. It's a problem that we have to solve, and it affects all of us. I always tell people that it affects everybody. It's like nobody. Someone was telling me something on Twitter that Nigerians love second-hand vehicles, and I said nobody loves second-hand vehicles. It's condition. You understand? Just like some years ago, I remember when we used to buy second-hand clothes. Nobody loved to buy second-hand clothes. They just had to buy it. So when they could earn enough, they moved to brand new clothes. The same thing happens with the car business. Nobody loves second-hand cars. It's because the earning power is not enough, and so people gravitate towards what they can buy.
Because I love the scent of
brand new, yes.
Brand new car.
Anybody who's driven a brand new vehicle before will always want to buy brand new. They will always think, because first of all, the peace of mind. You have no issues for more than 4 years. Some people don't even know who a mechanic is. You understand? Like, you just send it to like if you buy from Nord, for example, you send it to Nord for periodic maintenance, and you're good. So what we need to do to reduce the amount of second-hand vehicles that we have in Nigeria is, number one, we have to stimulate, we have to encourage the local industry. that way, because when a lot of things, the platform is volume. We need to get guaranteed volumes for us to invest more. And when we invest more, the prices of vehicles will drop significantly. Just like what's happening with Dangote refinery and everything. The auto industry is a volume business. The scale must be huge for us to meet this. Now, when Nigerians buy these vehicles over time, just like it happened in South Africa, in 5 years, you're going to have second-hand, because the second-hand market will always exist. It's not like it's bad. The issue with Nigeria is that we take our own hard-earned money and send it abroad to buy vehicles that nobody wants anymore. Yes. So there's no issue with the second-hand market. It will always exist. But we're supposed to grow to the point where the second-hand market is a second-hand market of Nigerian-made vehicles. So it's a pipeline that can take about 5 years. So you need to create policies where we are, because Nigerians, like you mentioned, those are terminals. Nigerians buy about 500,000 vehicles a year. Yes. But so we need to find a way where a lot of those vehicles are affordable, brand new vehicles in Nigeria. After 5 years, you will now have a lot of used vehicles, because someone that bought a vehicle, let's say in 2020, today it will be 5 years, he might want to change it. So it means that, so imagine we've sold 50,000 vehicles in 2020. It means today you're going to have 50,000 second-hand vehicles. You know, so that's a market. Nigerian made. So that's a market. So all they need to do is go to the market, drop the money, and get it. You don't have to change it to dollars, put pressure on FX to bring in vehicles from abroad. Right. That's one way.
All right. So let's look at on the African context now. We're seeing vehicle production for 2023. That's the last data I saw there. I think Nigeria produced about 2,034 units, but we see Morocco, 535,000 units. That's what they produced. South Africa produced 633,000 units. Egypt, 23,754. Nigeria still, you know, we're still lagging, you know, when it comes to output there.
We have to, because we're a very big country. I was listening to an interview yesterday from Alhaji Aliko Dangote, and he was talking about something some of us have always known, that almost every day millions of kids are born. Nigeria is one of the fastest, in terms of population, growing countries. In the next 50 years, we're going to have maybe the third largest population in the world. Where are these jobs going to come from? The jobs have to come from industrialization. So we have to look inwards. This Nigeria First policy is a very fantastic one. Now, like you mentioned, now we have South Africa buying their own cars, the cars they make in South Africa, creating jobs. The auto industry is contributing significantly to their GDP. Same thing with Morocco, same thing with Brazil. The same thing has to happen in Nigeria. And one of the ways, I think, I'll mention there are 3 ways I think it happened. 3 major ways. The other ways, it has to come step by step. Number one is some certain policies, which if I have time, I can explain. Maybe if
you have time.
Yeah, so the first one is you have to create a policy, you know, tariff policy that would encourage buying brand new vehicles.
Talking about tariff.
Yeah, let me mention
policy.
the 3 first. Let me mention the 3. I'll go back to that.
All right.
Because tariff alone cannot do it. It cannot do it alone. It has to come with, it's the most important. Without tariff, you are wasting your time. Because tariff is the only thing that can give you guaranteed volume at this point. And guaranteed volume is the only way you can justify certain investments. Some of us are investing regardless. We just ordered welding machine worth millions of USD. People are asking me, are we okay? I tell people that one day Nigeria would realize we need to industrialize. And at that point, we will be ready. So that's what we're trying to do now. So number one, we need to have the right tariff. Number two, we need to, this Nigeria First policy, we need to make it mandatory for government officials, government parastatals to buy a sizable, more than 50% of their vehicles are made in this country. Then in number 3 is consumer finance, auto financing. You cannot have a thriving auto system if you expect people to bring out the money, everything from their pockets. No. Even those that have it will not want to. you have to have a system where the financing is very, very attractive. And we're also working on that. And I think Credit Corp is also working on that. So that's fine. So those three things have to work hand in hand.
But it seems from what you just said now,
yes,
you must be a fan of Trump's protectionist policies.
Not necessarily, but
because he's using tariffs.
No. So it's not,
he's trying to get the local industry, the U.S. moving. He's trying to put the jobs back in the U.S.
Yeah. So it's not a Trump thing only, right? Trump is just a lot more blunt about how he goes about it. Is this the first time the U.S. has been protecting their country? China, you can't import vehicles into China. Yes. If you see Toyota, for example, Toyota Sienna is not made in China. If you see it in China, it means that the person who drives it is a very wealthy person. Yes. The Sienna we see everywhere here. If you see it, there's a wealthy person. Because they make other models, they don't make that particular model there. So every country protects their industry, protects their people. Some countries are very subtle about it. Some countries are very loud about it. US was a bit subtle about it until Trump came in. So that's it. So now talking about it, let me even explain to you. Let me just go into it a bit. So the first thing is you have to do it, like I said, in a very strategic way that gets the results without allowing making everybody those that should benefit, which is mostly the Nigerian people. So the first thing is you would retain, do not increase the tariff for vehicles that are 5 years old and older, because that's the vehicle. Those are the vehicles that the middle class and the masses buy. For those that want to buy, they usually, like I said, so basically, don't increase vehicles for Tokumbo, for second-hand vehicles, because they're usually 5 years old and older. So don't touch it. Leave them. Let them buy what they want to buy at the current price. So don't touch. That's not the market. Also, do not increase tariff for buses that move people, you know, because you don't want to, if you increase the tariff, people might say, oh, they want to increase prices or so, reduce the cost of transportation, you understand? So don't increase tariff for buses. Don't increase tariff for trucks that are more than 10 tons, because those are the trucks that move goods and services around the country, food from the north and everywhere. So don't increase the tariff, even for brand new, don't increase the tariff for that. But now increase tariff significantly for passenger cars and pickups that are brand new to 5 years old. So I repeat, 5 years old vehicles all the way to brand new. Because those are the vehicles that the elite loves to buy. They have to show, you know, that, oh, I have this, I have this. That is the market. That is the market where you can provide the guaranteed volume for the local assembly companies. That market and the government, those are the two markets. When you do that, like I said, in 5 years' time, you will have a second-hand market for made in Nigerian vehicles. And over 10 years, you will just realize that we're not even spending any money importing, whether brand new or used anymore.
All right, so since the last time we spoke, what have you seen, you know, when it comes to consumer sentiments towards cars made in Nigeria? What have you seen so far?
Very, very, very impressive. My company has grown, personally, my company has grown so much, and that's because the trust is growing, especially from the big corporates. Like I was looking at let me say the biggest 5 companies in Nigerian Stock Exchange. 4 of them are not customers. 4 of the biggest. 4 of the biggest 5 in Nigeria are not customers. And they were not customers the last time I spoke to you.
Wow.
That's 18 months ago. Today, 4 of the 5 biggest companies in Nigerian Stock Exchange are not customers. That's how much we've grown. And even the consumers, the customers, when I mean the one customer, the retail, they're also coming in, they're buying, because I think it's word of mouth. People have tested, they've seen the vehicles, they've seen that the quality is comparable to any vehicle anywhere in the world. The after sales is there. So, and I think, and this is something that I don't just want even know to just benefit. I'm not trying to build a company just for myself. I'm trying to show the entire world that Nigerians can build our own thing. We're trying to build something that would, for me, outlive me. Generations will come, create jobs. Because the auto industry, I worked in Mercedes-Benz. In Germany, you can see how almost every industry is tied to the auto industry, even their military. The auto industry is the mother of a lot of other industries. If you have a thriving auto industry, you have so many other industries. Upholstery, foam, battery, fabric, everything. Because a car is like a small house. So, and very techy small house. So you have a lot of things going into it. So to answer your question, it's been very good. Business has been good. We've grown our revenue, and even FRS is happy about us because we now pay more taxes, you know. So everybody's...
And that's why we need the enabling environment so that...
Yeah, so that everybody grows. Yes, because if we grow, you pay more taxes, you pay more VAT. Yes, everybody's happy. You create more jobs. So my staff are here. What we're paying, salary we're paying when you interviewed me last, we're now paying about 5 times more. Like in terms of like when I sign every end of the month, we now pay 5 times more than what we're paying just about a year ago. These are very. I have people.
All right. So there's a question I like to ask. You know, CEOs. You know, when I catch them. Right now, looking at the Nigerian economy, what keeps you up at night, and what gives you sound sleep?
What keeps me up at night is mainly the amount of risk that I take. I'm a very risky business because you are a lot of stakeholders, a lot of... So FX, for example, even though it's stable, you're still a bit worried that, okay, can I do this, can I do that? Then policy change, we're hoping that the policies are favorable to you. So those are the things. There's so many uncertainties in the business, so many I can't even... You know, so those uncertainties keep me up at night. Labor is also an issue, I'll be honest with you. It's very difficult no matter, like, as a Nigerian business at the moment, you know, it's very difficult to attract and retain top talent. Because the only way, I told you, we're competing with the best in the world. You know, I want vehicles that can meet anywhere in the world, which means that we have to attract talent that can work anywhere in the world. Right now in Nigeria, it's very difficult even if you attract them, difficult to retain them in the country. You know, it's not, you know, so those are some of the things. So I do my best to try and retain my best talent, which is very, very difficult because sometimes you have to now forgive some disciplinary issues that you'll have taken because I say, this person is too important to the company. You have to let some things go that normally you shouldn't let go. So those kind of things are quite difficult. And things that make me sleep at night is the fact that I'm in a country, a country that has huge population, one of the biggest in the world, one that has might in the world. Like people look at Nigeria, when they look at Africa and say, oh, Nigeria is where we need to be. And it makes me know that our dream can be actualized because the country has the potential to actually absorb what we want to do. So that makes me very happy.
Fantastic.
Yeah,
and I hope we get better sleep and more sleep.
Yes.
Going forward, that's a good place to anchor it. Thank you so much, Mr. Oluwatobi Ajayi, CEO of Nord Automobiles Limited. I hope you brought me a car today.
Yes.
Hopefully.
Yes. It's downstairs.
Downstairs. Wow.
Yeah.
I'm so excited. Thank you so much.
Thank you.
Always great having you. Well, the head of the European Union delegation to Nigeria and ECOWAS, Ambassador wrote here, Mignos, reiterated the EU's support to financing windows that will help meet the developmental needs of the country. Ambassador Mignos, who made the commitment in a meeting in Abuja, says interventions across various sectors in Nigeria, which runs into millions of pounds, provides an opportunity for uplifting people and changing challenges to opportunities for all persons. Our correspondent, Sarah Chimagu, has a report.
This seminar on advancing sustainable development through the EU-Nigeria Development Corporation is one which is bringing key players together to leverage on collaboration as a tool towards the attainment of economic growth. Development partners, commissioners of budget from the 36 states, as well as top government officials are attending the meeting.
If we put all the euros, all the dollars, and we cannot get result, you know, it does not translate into reality. So it's important that we look at outcome an impact.
Issues of how to deploy specific instruments for innovative financing forms part of the discussion. The head of the EU delegation used the opportunity to reel out its intervention programs for Nigeria while pledging its commitment for more in the years ahead.
It's not about exploiting resources or commodities. Of course, we have interest also to have access to some raw materials, commodities, etc. But our core interest is this, is to have a stable neighbor, a neighbor we can be prosperous with. And in the current turbulent geopolitical times, where many things are changing, many alliances are falling apart, I think it's important to have a steadfast partner, a reliable partner, and this is what we want to be with Nigeria, and I think what we think Nigeria is for us.
The Minister of Budget and Economic Planning expresses gratitude for the EU support and assures that the government will continue to align its policies towards improving livelihood.
The bold reforms that we undertook shows our willingness to improve our revenue to GDP ratio significantly so that we generate our own resources and demonstrate to partners that we are always willing to do the right thing, and commendably we have moved from less than 9% to about 16% now. So, and we will do more.
The meeting is expected to explore ways of providing a platform for impactful sustainable development financing. Sarah Chimugu, Channels Television News.
And talking about funding, Nigeria's economy runs on small and medium-sized enterprises, yet millions of these businesses remain underbanked and underserved. As digital platforms transform commerce, embedded finance is emerging as a game changer, offering credit, payments, insurance, and savings right at the point of need. But can this innovation truly bridge the financing gap for SMEs? And what will it take for banks, fintechs, and regulators to align in making it work? Joining us for this conversation, however, Shea Seton is a co-founder at Vendor Credits. Great to have you on the show, Shea.
Thank you for having me, Lady. Good to see you again.
Fantastic. Great to see you. A nice hat there. But before we get into the conversation now, break it down for us what exactly embedded finance means.
Well, so embedded finance is akin to what e-commerce, right, has done to traditional trade. So basically what you're saying is a situation where you're able to access financial services and products like lending, savings, insurance, and investments, right? Instead of you having to go and look for them, they actually come to you on the platforms in which you do business in. So embedded finance, simply put, is basically integrating finance, right, into platforms where non-financial transactions typically occur.
Right, and are you optimistic, this could bridge the massive financing gap, most of these SMEs have?
Oh yeah, definitely. Like I explained, it's akin to what e-commerce has done to traditional trade. And the difference is this, think about it from this perspective. Right now, if you want to access finance as an SME, you need to physically walk into either a bank or touch any of the touch points, gather all your data, gather your collateral, your birth certificate, and all those crazy things that are usually requested for, right? And then apply to the banks, and then they start processing it back end for you, right? What embedded finance does is it changes the game. So it now becomes a situation where the banks come to your platform where you do your trade. So let me give a simple example. If I'm selling on any e-commerce platform, for instance, right? Typically, I have to gather my statements and send it to the bank for them to do an assessment. But the variance now is with the fintechs and what embedded finance offers is all the analysis will be done on that platform once you give them consent to access your data. And they can make offers to you at that point. So for instance, what we are doing at Vendor Credits is just ensuring that your power changes hands more or less. And that choice is finally in the hands of the consumer. So they're in a position where they're able to see a variety of loan service providers right? And be able to determine, which product suits their need the best, which terms are better, which tenor is better, which pricing is better. So yeah, embedded finance, as long as we continue to have expansion in, internet penetration as well as mobile phone penetration as well, and e-commerce and digital platform payments continue to increase, those ingredients make a sweet recipe for embedded finance to continue to thrive and include SMEs that typically didn't have, have never had these options before, right? It makes it accessible to them and finally puts the remotes in their hands.
Right, and talking about, the cost of credit, cost of money at this time, I know investors, businesses, they're all watching out, for the body language of all the central bankers that are all meeting, this period, this week, into next week here in Nigeria. But, looking at embedded finance, what platforms or sectors in Nigeria, for example, we have retail, logistics, agriculture, which ones present, the biggest opportunities, in your view, for embedded finance?
Well, so e-commerce is huge. There's a lot of transactions going on the e-commerce platforms. I think over 65% of the payments that happen on e-commerce are digital, right? Digital forms of payment. So e-commerce is the immediate one because they've captured your transactions. They have down to the nitty-gritty of the details that are available for you. So off the back of that, you can be able to use that to access credit or any of these other financial services that you require. I think e-commerce encompasses social commerce as well because we know a lot of payments are happening on that platform. Agro and other services that, other platforms. I think the second one I would say is that on supply chain ERPs as well, that also provides a huge opportunity because that captures the spend of pretty much all the big wigs in Nigeria, right? Every big manufacturing concern, oil and gas, and all these other guys. That also presents a huge opportunity for embedded finance. Government spending as well, because from the expenditure budget of the government, which is in tens of trillions, right? There's an opportunity to integrate into that and also be able to enable contractors, vendors, and service providers to the government to be able to also access capital and as well as other services like insurance, bonds, and all those kind of things in a seamless and fast manner. And that's what we are working at in vendor credit to ensure that we bridge that gap, we fill this opportunity, and that we change the narrative for SMEs, ensuring that they're not just surviving but ultimately thriving as well.
Right, definitely. We need the SMEs to make a lot of money so that they can employ more people. But many SMEs lack, formal records. Although we have NIN, we have BVN, and now we see the government looking at enforcing the tax ID come 2026. How excited are you, for that, when it comes to, getting records straight when it comes to Nigeria's, and, some of the SMEs that maybe sometimes lack all the information or are not registered? How are you excited about, the government's stance here on this tax ID policy?
Well, I think it's a step in the right direction. I think maybe I would have a differing opinion from me as to whether SMEs have financial data or not. The reality is that SMEs actually do have data, right? It's just that the data is not, in a format that the current financial analysts, right, need to be able to make a lending decision. But they do have data, and that's what digital payments as well as e-commerce driving trends, right, are doing for a lot of these SMEs. What they've been able to do is to capture a lot of their data, their trade data, down to how many units or items they are selling per day, who they are selling to. All that data now comes together in a place that makes it easy for those that need to make financial decisions, right, to make an assessment of the risk of the SME, right? And then once you've been able to assess the risk, then you can price it and determine how you want to structure the facility. So in a nutshell, I think, the times for SMEs, the future looks very bright for SMEs. The opportunities and the game-changing technologies that are coming to play are going to make us be able to drive down this high mortality rate. I don't know if you're aware, but They said 8 out of 10 SMEs in Nigeria die within their first 5 years.
Right.
And it's ridiculously high when you compare it to other African countries, which is maybe 5 out of 10. So these efforts, right, government has to capture tax, and not just capture tax for tax purposes, but also capture it to know where they need to do interventions, right? Know which areas it is that, if they're going to be running programs where they want to intervene in SMEs, they're able to know, based on that information, where that intervention can occur.
Right.
It also enables financiers and the rest of them to also have data to make the decisions that they need to make.
Right, because I also saw a recent data, showing that business birth rates in Nigeria has declined sometime in 2024. But you did talk about game-changing opportunities that are coming up. What kind of partnerships are we seeing there? Because we have we have the telcos, we have the fintechs. Everyone is getting into that credit space at this time, even the traditional banks. So what kind of partnerships are you seeing in the pipeline?
Yeah, well, I mean, I can only speak on my experience, right, in this space. And I mean, we've been fortunate enough to gather and to sign some partnerships. We've signed partnerships with the largest e-commerce platforms in Nigeria, right? And that's good for us because we're able to launch and offer embedded finance to there are over 100,000 merchants on their platform. That's on one side. We've also seen partnerships on the banking side where banks, we've been able to show banks data, right, that supports us, the activities that we're doing, especially in lending to SMEs, right? And we've been able to sign up about 3 banks where we've done partnerships where they are pretty much providing lines for us to be able to meet the demands for those SMEs. And then on the corporate side as well, which is on the physical side where there's not a lot of e-commerce, where it's just traditional trade. We've also been able to offer, sign up partnerships in that direction across 6 major sectors. That's fast-moving consumer goods, manufacturing, energy, telecommunications, construction, healthcare, and NGO as well. So we've been able to sign partnerships across those major industries, which are the target industries that we're interested in, and offer some level of embedded finance, right, where we're running pilots as it is, but the full idea is to be able to integrate with their ERPs and ultimately offer a seamless, offer seamless financial services in an embedded format to the vendors and service providers that work with them, which are primarily SMEs, just to mention that.
All right, so definitely we know this sector is not risk-free. What risk do you see, in rolling out, embedded finance, but at scale?
Well, I mean, Toby, your previous a friend of mine and your previous guest, right, talked about the things that keep all entrepreneurs up at night, right? Risk, obviously, is one of them. Of course, we have to, with technology comes a lot of risk. There's conversation around data, protecting customers' data so that you don't have a situation where you have a breach, right, in customer-sensitive information. So we are data compliant and we're, ensuring that, we don't have those kind of breaches materialized on our platforms. Other types of risks is, of course, the credit risk in the transaction itself. But the reality is that you can't do lending without having some level of defaults. Your goal at the end of the day is to minimize it as much as possible, ensuring that it does not erode the margins that you're making, as well as the equity of the business in which you're running as well. So credit risk, data protection risk, of course, government policy as well. I think the CBN recently launched a vision roadmap for payments in 2025. Very robust and ambitious targets have been set there, and they've outlined, what it is that they believe would drive growth, economic growth for the future of Nigeria. And, we buy into that as well. Our prayer is that, in terms of being able to implement it, right? Implementation, is done in the best possible way under the best possible standards, just to drive things in that direction. Then, I mean, and other risks exist, but some of them can also be opportunities like FX.
Right, FX. And we've all been enjoying stability for a while now, and I guess we're getting used to it, so far. But beyond credit, what other, financial services like, insurance, savings, payments can realistically, be embedded for Nigerian SMEs?
Oh, no, what you've mentioned, insurance can be embedded. So imagine today if I get a contract from whether it's the federal government or any of these blue chip multinationals, right? And there's supposed to be an advance payment that's supposed to come out of it, right? Usually what I have to do is go to the bank, right, and ask for, oh, I need an advance payment. They will ask me to bring a whole lot of documentation. They want to verify my contract and a couple of things like that as well. We have been able to pioneer that on our platform where, you can get advance payment guarantees, performance bonds, and all of that off the back of the partnerships that we have with major insurance brokers as well as insurance companies, such that the time frame of maybe 2 to 4 weeks that it takes for you to access it from traditional financial institutions, you can get the same thing within 24, maximum 48 hours on our platform. So look, savings, insurance, all kinds of financial services are already being embedded. Interestingly, the World Bank estimates that by 2030, right, embedded finance is going to be a 7.2 trillion market. So it just means that the possibilities within embedded finance is endless. It's pretty much breaking down that brick and mortar structure and that currently exists, that has a lot of bottlenecks and limitations around it, and democratizing the process so that as long as you don't need to know anybody for you to be able to get what you ought to get. And I think that's what embedded finance offers, a ground leveler.
All right, definitely we like forward guidance. We like to look ahead. Looking forward now, what would you rate success in embedded finance, for SMEs? What do you think that would look like in the next 5 years?
Oh no, I think there's going to be a lot of penetration in this space. Like I mentioned, the World Bank has already estimated that about $7.2 trillion globally is the size of the opportunity of embedded finance by 2030. That's 5 years from now. What I see in terms of what that means in terms of practical terms is you're going to see a drive up in financial inclusion, right? As well as, people that primarily had been underserved, SMEs that have been underserved by the financial service segments, right? Now have, seamless and easy access. Data, we're going to see the democratization of data. I think open banking is going to make that a reality for everyone. We're going to see, importantly, choice, right? The consumers, which in this case are the SMEs, will be spoiled with choice, because what embedded finance now does is that it enables them to share their data, right, with as many people that are willing to offer them services. And just the same way when you go on any of these travel sites and you want to buy a ticket to the same destination, it shows you a variety of tickets and airlines and the various services they're going to offer as well as their pricing. We're going to see that happen to SMEs as well. We're going to see job creation improve because as credit comes in, they have the ability to expand and hire more people. And then lastly, we're going to see a significant improvement when it comes to the survival of SMEs. So for me, once they have access to capital as well as other critical financial tools, those things are going to elongate their life, and hopefully you can see a situation where maybe 4 or 2 or 3 out of 10 SMEs are able to survive not just the 5-year barrier, but even the 10-year barrier as well. Fantastic.
So hopefully we see more birth rates, more survivals for businesses and most of these SMEs. Always great having this conversation.
Maybe you can now focus more on your side hustle than your main hustle.
Fantastic. Thank you so much, Shay. It was great talking to you, co-founder, Vendor Credits. Thank you for coming on today.
Thank you for having me.
All right, we'll get a check now on what's playing out in the global space. And yes, as I said before, investors right now watching out for what's going to be said from the U.S. Fed. We're all bracing for that one coming up later today. But let's get to some stories now. For you see Stellantis, they're pulling back nearly 164,000 Jeep SUVs in the U.S. over a safety risk tied to loose door trims. The recall flagged by federal regulators covers 2022-2025 models of the Chrysler Jeep Wagoneer and Grand Wagoneer, where trim on the front doors could detach and pose hazards on the road. Dealers will inspect and fix the issue at no cost to the owners there. Some other company news now. We see PZ Cotton shares climbed over 7% today, making it one of the top percentage gainers on the FTSE Small Cap Index. The consumer goods company reported like-for-like sales growth of 8% for the fiscal year 2025, nearly doubling the 4.4% growth recorded in the previous year. PZ Cotton also provided an upbeat outlook for the current fiscal year, forecasting like-for-like revenue growth of 10% for the period from the start of fiscal year 2026 on June 1st through September 30th. Then over 70% in debut trade shares of Urban Company Limited. That surged over 70% on their market debut today after the Indian home services platform's initial public offering and drew heavy demand from investors. The stock opened at 162.25 rupees on the National Stock Exchange, compared with its issue price of 103 rupees. The stock jumped as much as 74% to 179 rupees in the early hours. I was trading at 170 rupees as of the 4:52 GMT. So that one's looking really good right then. As I said before, all eyes on Washington as the U.S. Federal Reserve delivers its much-anticipated policy decision today. Investors are bracing for the outcome, weighing the chances of an interest rate cut against lingering inflation concerns, a call that could ripple across global markets from equities, currencies, and commodities. So if you're going to make that trade, you have to be very, very wise today. All right, let's look at what the big investors are doing. Cathy Wood's ARK ETFs have disclosed their daily trades for Tuesday there, September 16, 2025, showcasing a series of strategic moves in the tech and biotech sectors. The trades reveal a pattern of continued investment in certain stocks while scaling back on others, reflecting ARK's dynamic investment strategy. The most significant purchase that was in bullish BLSH ticker, where ARK's ARK and ARKW ETFs combined to buy 161,000 shares, accounting to a substantial investment of $8.2 million. This move underscores ARK's bullish stance on the cryptocurrency exchange, following a pattern from previous trading sessions where ARK notably increased its holdings in the company. So definitely you see what the big investors are doing there. Then NVIDIA, they partnered with the UK on an £11 billion AI infrastructure investment. NVIDIA Core, they announced a partnership to build artificial intelligence infrastructure in the United Kingdom with companies including CoreWeave, Microsoft, Enerscale, planning to invest up to £11 billion by the end of 2026. The investment will deploy up to 120,000 NVIDIA Blackwell GPUs across UK data centers, which the company describes as the largest AI infrastructure rollout in the country's history. NVIDIA also announced it will enable UK cloud partners Enerscale to scale globally with 300,000 NVIDIA Grace Blackwell GPUs worldwide, including up to 60,000 GPUs in the UK. And UK inflation, that held steady in August, according to data released earlier today, almost twice the Bank of England's target, suggesting the UK Central Bank will keep monetary policy in change. That's tomorrow. That's when they're making the decision. Annual consumer price inflation rose 3.8% in August and changed from the July release, but still considerably above the Bank of England's 2.0% medium-term target. So definitely be looking out for what the Bank of England will do with that. But that's it today for Business Morning, and definitely more to come. Stay with us.